Are we today? So, as per my last video I made when Bitcoin was trading up at $104,900, um, I did say that I think it was around here, one of these candles here. I did say that the 50 TMA strategy, which I have talked about many times before, was short. So, technically, if you follow the strategy, you would be short. And I talked about how the weekly BX trender was also making lower highs. So, although lower highs is different from lower lows, it does not mean go short on the weekly chart. It just means not to go long. As you can see, we're starting to get a higher high this week, but obviously it is only Wednesday, so that's not confirmed yet. But basically, this just goes to show how important it is to follow the strategy. Now, even though I drew a bullish pennant here, you can clearly see that we did end up breaking to the downside of it, and I did give you guys a few downside targets. And as you can see, the $100,000 psychological level has held really strong. A lot of people were calling for like 93,000. Apparently there was like a CME gap somewhere down there at 93,000. Others were saying we could go all the way back into the 80,000 range, but yet again, it goes to show that 99% of people don't know what the hell they are talking about, and the 93K all-important level that Jason Pizzino is talking about has clearly held really strong. And I was talking about how this consolidation here could act as support, and if you have a look closely, we have almost perfectly wicked into the top there. Anyways, we don't dwell on the past, but what we do is a lesson. Now, I did not go short on this trade because I personally believed it would be a fake out move to the downside. I actually believed this candle would close above the 50 TMA and we would start to go parabolic from there. But it just goes to tell me yet again that we do need to trust Michael Pizzino's analysis because he is just better than me. That aside, I did not go long, which is a good thing. I would have gotten absolutely smashed right here. We would, on a 10x leverage, I would have been down something like 65-70%. Not liquidated, unlike the $1 billion plus dollars of people not understanding how to trade and not following a set strategy. But anyways, enough of that. You can clearly see this bar right here on the 23rd of June is what Michael Pizzino likes to call a gotcha bar. When everyone is too scared to buy at the lows and they think price will continue to go lower like it has been for the previous few days, and you get this massive move up, and obviously it's liquidating heaps of shorts, but also people who are sidelined who did not buy the low will now have to FOMO in at higher prices. Now, what is happening right now, in my opinion, looks like a upwards consolidation. Now, these upwards consolidation patterns, as Michael has talked about on his YouTube channel, tend to be extremely bullish because, as you can see, we got something here in April. We just made higher highs, higher lows. Everyone thought it was like a bear flag or whatever people were going to call it, but obviously it wasn't a bear flag, and it ended up being a nice bullish breakout pattern. And if we have a look back here, we're going to have to look way back. It would have been at the end of 2023. So something like this. Now, this isn't quite an upwards consolidation pattern. It's more of like a sideways consolidation pattern. Sorry, this one right here. You can see how it's not quite a bullish pennant, but it's just some sort of upwards consolidation pattern. And same here. It does usually lead to higher prices. But there is one thing. Sorry, I just completely lost my train of thought right there. I sounded absolutely ridiculous. But you can clearly see all these like little consolidation patterns, regardless of the shape, after these massive gotcha bars, provided price doesn't snap right back down afterwards and make lower lows, tend to break out higher. So what I wanted to say is I don't actually think we are out of the woods yet because we do not have confirmation of higher prices. Now, you obviously know I've talked about the weekly BX trender strategy. If my internet will help me here. There we go. We want the weekly chart to close with higher highs, so light green. So if this week closes light green, the theory that I talked about in my last video of us being in a phase that looks somewhat like this, September 2021, where we have 3 lower high weeks, then we get a higher high week, which may take out the high of the previous week, and after that it is just a straight parabolic move up. Like on this weekly move here, where are you going to get in? Like, where do you FOMO in? If you're not already positioned from the lows, do you wait for a pullback, or do you just FOMO in? Or do you continue to sit sidelined, buy the pullback, get into a slight profit, don't see other people posting about their 100x altcoin gains, don't sell the peak and get absolutely wrecked on the way down? So that is why I will be watching this weekly close really, really carefully. Now, as you can see, we have already taken out the candle body high of the previous week. So if we close up here around $106,000, I am absolutely going to be going max long, especially since the daily 50 TMA strategy is also on the verge of firing along. Now we can see the daily 50 TMA is $106,056 on the Bybit perpetual contract chart, and we are currently trading just under $100 above it. So if in the next 12 hours, sorry, I literally cannot maths, like 9.5 hours, we close above this, I will also be going long. Now, another strategy you can use to go long is the daily BX Trender strategy, where you buy in on either a higher low or a higher high, depending on how you want your risk tolerance to be. Do you want more risk for more reward, or less risk, more reward? Less risk, less reward, as Jason always says. You pay a premium for more confirmation. So technically, I could have entered on yesterday's close, so this morning at $106,044, and I would have gotten a chance to make around $750 per Bitcoin. But I have instead decided to wait for 3 of my strategies to align together: the daily BX Trender, the daily 50 TMA, and the weekly BX Trender, to all give me a long signal so I can be more confident that this massive bullish pennant pattern is actually going to play out. Now, obviously, price does not have to reach exactly $146,100, but even if we get, say, another 2 straight weeks up from here of 48 to 54, so that's about 15%, 54 to 61, so again, about 12-ish%. So if we get a 27% move from here, roughly, don't mind my quick maths right there, from this week's close, it would take us to roughly $135,000. Now, if you watch Jason Piscino's videos, you can clearly tell he thinks the ranges of around 120 to 130K is pretty likely for a cycle top. So if we do end up making a wick up to 135,000 or even 145,000, then it would definitely be expected. Like, it would be great to see higher prices, but obviously I am not going to be wed to any price targets. If I can make $20,000 per Bitcoin, I am going to be very happy, especially this late in the cycle. Now, to the bad news. Obviously, if I can use TradingView properly, we do still have this all-time high trend line up here that has not been broken yet. Now, I do know Jason made a Hopium video where he talked about a potential 4th time breakout of these tops if we draw some sort of trend line to connect them together, maybe something like that. So depending on how long it takes for us to reach those prices, provided that we just make a new all-time high and touch, say, go $500 above it, so $1,000 above it, up to 113K, that would be a 4th time breakout and may potentially also be a 4th time breakout of this trend line. So all in all, there is a lot of hopium. So we've got 1, 2, 3, and 4. Not quite. So it'll actually be a fifth time breakout of that trend line. Either way, that is the bullish hopium for us right now. But obviously, I'm waiting for more confirmation. But on the other side of the market, we have not seen this daily swing top on the 2-bar Gann swing indicator, which you can, if you guys want, you can go look in the description of Jason and Michael's YouTube videos. It's still in a downtrend. You can see the daily 1-bar chart is neutral, but the 2-bar chart is still down. And on this A leg of this A, B, C correction, you can see the daily 2-bar chart almost perfectly made a 1, 2, 3, 4, 5 pattern. Now, this recent pump has invalidated this 1, 2, 3, 4, 5 pattern because wave 4 cannot retrace back into wave 1, which is something I learned from Michael and his work over in TIA Premium. But it can still make a WXYXZ correction. Now, this is a pattern I am not super familiar with, so this might not be 100% valid. Like, I had a read earlier, and there was a bunch of like fib retracement rules, like how far it could retrace, like each leg was able to retrace. Now, unfortunately, I do not claim to be an expert after just 5 minutes of reading, but this is a potential pattern that I am stalking, especially if we cannot close this week above the 50, if we cannot close this day above the daily 50 TMA, and if this week does not close back above my blue line and back inside this pennant, then we would expect further downside. Now, where would my further downside be? You can see back in 2021, the 50-week triangular moving average was retested twice before the final parabolic move, and it looks like this time, since we have touched this all-time high trend line, so this peak would not count, we have only backtested it once. So if you can sort of figure out what I'm talking about, in all previous cycles, this was not a new all-time high. Like, this first leg up would have not breached the previous all-time high, but this cycle's been a bit stronger. You can go watch all of Michael's videos on that. So if we go back to my Bybit chart, sorry, this video is going on a lot longer than I wanted it to. No, it was not on my Bybit chart. It was on my Coinbase chart. You can clearly tell from the previous cycles, when we touch the all-time high trend line, we get 2 weekly 50 TMA bounces before the final blow off top. But this cycle, since we have touched this trend line, we have only bounced off of it once, which means that on this next correction, before we print the cycle high, it is possible that we backtest it one more time. Now, obviously, I'm not saying we crash to $88,000 straight away, but if we were to see a WXYXZ correction, we could still grind out inside this massive trading range between these two yellow lines for another few weeks. And that would give the 50-week triangular moving average some time to come up to, say, 93, 95K. And then all the bears that did not buy this last dip will be happy to finally get another chance. Now, obviously, Jason has talked about the further we correct, the weaker the market. And when you project Fibonacci extensions, it brings the price targets down, which is obviously not a good thing. So if this cycle was to continue being stronger than all the previous cycles, like it has been this whole time, we would not see this WXYXZ correction, and we would instead potentially be printing a 1, 2, 3, 4, 5 impulsive wave from here. So if we say that 98K was the low, we could see a first wave up to potentially ideally break this $109,000 swing top. So potentially somewhere around these two previous swing tops, we could see a bit of a rejection at the 110K psychological level or the 108, well, ideally not the $108,000 line that Michael's drawn in his chart. I know he has a line around 108,500 if you watch his videos, but we could get a wave 1 somewhere up there, a wave 2. Remember, the shallower the correction, the stronger the market. And obviously, I am out of space here, but we could get a nice 1, 2, 3, 4, 5 on the daily chart, which would line up with a wave 3 on the weekly chart inside a wave 5 on the monthly chart. So whatever this ends up looking like, so something like this, where we meet some resistance anywhere in this range here, have a nice shallow pullback, and then have a nice fourth time breakout of both of these trend lines on our wave 3, which are typically the longest and strongest waves, backtest the trend line, and then go on our final extension move. Now remember, this would only be a wave 3 on the weekly. So that means we would potentially see another correction. So something like an A, B, C correction. And then we would see our final weekly wave 5. So anything that ends up looking like this to complete the cycle, if I can actually size up my chart properly. So anything that ends up looking like that, which could potentially bring us to some crazy price targets like 170, 180,000. I know some people are crazy bullish, but for me, I will be taking profits as soon as if we start breaking the $120,000, $130,000 level. Anyways, that is all I have for you guys in this video. I will try and get a end of week update to you guys to look at how my strategies are going. And if you, I don't know what to say. Like, I was going to say, if you're still sidelined, I would make sure I develop some sort of plan. Like, you definitely don't want to be sidelined the whole way up, waiting for a bigger correction, and then go, nope, I don't want to miss out on the next move, buy the top, and then just get absolutely wrecked. Like, for me, I did buy this dip here at $98,000. I actually got in at 99,000. I don't claim to be able to buy the exact low, but I unfortunately sold out pretty heavily around the 101,500 mark because I wanted to have a peaceful night's sleep. I woke up, the price was at 102,500. The 4-hour strategies that I follow flipped long, and I have no idea why I did not long. So now I have ignored the 4-hour entry, so I'm waiting for my daily and weekly entry confirmations, and I really hope that I take action if I do get a buy signal. And for you guys' sake, I hope that if you are still sidelined, that you do develop a strategy that tells you when you're going to enter. Anyways, thank you all for watching, and I'll see you guys next time.